Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today's Tuesday. It's February 21st, and don't ask me where this year's going. It's about 7:32. The market's going to open up in just a little less than 2 hours. I'm here a little bit earlier because I want you guys to get the material nice and early before the market opens. So, as you can see here, the Dow's down 288 points. The Nasdaq's down over 128. That is definitely not randomness, okay? And if you look at the price action right now on the NASDAQ, just wanted to kind of give you an idea of where we're at. Let me just use a time period that's, there we go. It looks like we're, let me eliminate all these graphs here. You can see here we are in fact drifting lower. Now, we may be opening lower, going higher, opening lower, going higher, but watch for these lows to be broken. And on the SPY, just to kind of give you the same, it looks like we're we're almost down at that level. So you could see here, it could go down a little more, but we are in fact in this descending channel type of an environment. Doesn't really look like a flag at this point, just looks like a channel that wants to give up. And the Dow has actually been stronger than most. It's been holding on to its choppy factor, but it is moving towards the down end of the range. And as you can see here, if we're going to remain in this area, the Dow Jones could stay here for quite some time or hover around this area. Now, this is a perfect environment for swing trading because, I mean, look at this. 34,243, 33,500. I mean, look at this. It's like 700-point swings a day, right? I mean, let's look at volatility. I'm just out of curiosity. I haven't looked at volatility in a while. Let's see here. Let's look at average true range over 10 days. Let's see how the number's been looking over a period of time here. So this is the volatility, and volatility is actually now at the bottom of its range for a while. Let's see here. Let's go back 2 years. Volatility is now cooling off, but I think volatility is going to start picking back up again, especially if we start hovering down or coming up. But notice we went all the way from 765 points a day on the Dow to about 400 points, which isn't all that abnormal. If we go a little bit lower, volatility will finally come down to normal levels where, you know, the Dow moves 280 points a day, 300 points a day, not 800 points a day. This represents the dollar move in the Dow, DIA. So if you want to know how much the Dow moves, just add a, just get rid of that decimal. So it would be 759 points a day, 383 points a day. But we're looking at the DIA, the diamond. So there's a decimal in there, $3.92. But look at the volatility. But it is cooling off a little bit, which is actually not the worst sign. But one of the reasons you're seeing that is because of the consolidation that we're seeing here. It also looks to me like the Dow's going to take this down all the way to the 32,967 level because that's just how it's been choppy, which means we have more downside for the market. Now, you may be asking, why is the market down today, right? Well, I've got answers for you. Home Depot has reported earnings before they open. Look at that. They're down 4%. Walmart is reporting earnings before they open. They're down 3.45%. So these stocks are both reporting before the opening bell, both Walmart and Home Depot. Now, Home Depot and Walmart are pretty significant stock for the retail sector. And look at Home Depot. It's going to open up down. So there's a good chance, there's a really good chance when the market opens today, it'll actually rally because these movements are a little bit overdone. And usually these blue chip stocks tend to overreact, and they see buyers coming in. And also remember, the market isn't exactly, the Dow's not exactly that bearish right now. It's just kind of choppy. But yeah, nonetheless, I think we're going to go down over the next week or so, down to the 330 level. I think it's inevitable. It's just a matter of time. And again, I hate to say I told you so, but I told you that this rally isn't going to get us anywhere. Now, let's talk a little bit about more earnings. You still have earnings. You've got Home Depot. They're looking at up 1.9% over year on 0.7 year-over-year EPS. They weren't able to beat it. Walmart, negative 1.3% year-over-year on 4.5 year-over-year revenue. I don't think they were able to beat it. It doesn't look like it by the pre-opening, at least. But we'll get into more of that into the VIP room later today. It's happening at noon. Now, we're also having earnings on other stocks. This is the last big week for earnings for stocks before we get into the Fed data. But this is it. After this week, only small caps, mid caps. This is it. So you still have some big ones. You got Caesars, you got Chesapeake Energy, you got Cracker Barrel. Oh, my wife loves that Cracker Barrel. You've got Elanco Animal Health. You've got Expedia. You got Fluor, Hostess brand. You've got a lot of big stock. Lazy Boy, LPX, MDT, Melly, like the stock, TAP, PanW, some Public Storage. A lot of big stocks still to come. So we still have a lot of volatility and a lot of unknown and unforeseeability going into this week. Now, NVIDIA is slated to report earnings on Wednesday after the close. That's a big chip stock, big AI stock. They're looking at 81 cents per share. This is one of the best companies in the world right now. They're looking to be down 38% for the year on 21% year-over-year revenue. Ouch, 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 ouch. I actually think they're going to beat estimates. But then you've got Baidu, you've got Cheesecake, you got, let's see here, you got Dutch Brothers, you've got Etsy, don't forget about Etsy, you got Extra Space Storage. A lot of retailers are coming out right now. So we got to be really cautious because retails can have a significant impact. And earnings really go through Friday. But on Thursday, the most of Papa John's, Planet Fitness, a lot of Steve Madden shoes, a lot of the retailers are popping this week. Friday, it winds down once again. And then after this week, the majority of it is over. Now, the bad part is this, folks. In mid-December, we were expecting earnings to be down about $2.90 a share. Right now, based on what we're seeing and based on where we're going, we're down above $8, negative $8 a share. That's very significant. There's no catalyst for bullishness there. Not at all, actually. So, in my opinion, the market doesn't really have a major catalyst right now. And then, oh boy, you've got GDP this week. Let me just kind of show you what the week ahead is. We got existing home sales today. You've got FOMC minutes. That'll be an interesting one. Boy, I'm sure they're all up in arms. Then you've got jobless claims, new home sales, but the big report is going to be GDP. How much growth we've had for the quarter. And that's really what it comes down to. Quarter over quarter, it's how much growth we have in light of what the Fed is doing with interest rates. Those two things kind of moving next to each other. So quarter over quarter, we're looking at 2.9%, 2.5 consensus to 3%. Remember, the target is 2% growth. So it'll be interesting to see what happens. I want to see how this number, and what's interesting, the consensus is actually fairly reasonable. It's expected to come in at 2% in the second estimate. We'll see what happens. I want to see if we get close to 2%, but personal consumption expenditures at annual rate, it'll be interesting to see if we can get it at 2%. People have been spending money pretty good. They've been a little more optimistic than I thought they would be, but it is what it is. Let me show you the bond market. And the bond market's been cooling off, which has been giving the stock market some much-needed selling pressure. And yes, the stock market needed selling pressure after that fiasco we saw last couple of months in the NASDAQ. The bond market looks like it's back down to its base. And I believe once we get down to this base level right here, we're going to start congesting. So we may be fairly close to the bottom. And as I said right here on the Dow Jones as well, the Dow doesn't look like it has that much more to go before it bottoms out. Maybe another 3,000, 2,000 points, couple thousand, from say 33,500 to 30, not 500. What am I saying? We're talking, I'm losing my mind, about 700 points, 800 points. So one good day like this could bring us to the bottom. It wouldn't be all that squirrely or anything like that. It would actually be kind of normal if we went from here to here. But it looks like we're going to remain choppy. I do think we're going to break the 200-day moving average eventually, but I think the market's going to give us a pretty good fight before we get there. Now let's talk about global economy and summarize some of the things that we talked about, and then we get into the sector nitty-gritty. So prospect of further monetary tightening from the Fed weighted on sentiment. Investors looking for minutes of the latest Federal Reserve. That's coming out tomorrow. Actually, wait a minute. I think that's coming out today. I'm so confused because today's Tuesday, right? No, it's coming out on Wednesday. Today's Tuesday. And remember. Monday, yesterday was a holiday, so we're going to have a fragmented week till about Thursday. Don't expect today and tomorrow to be full blast. There's still people coming out from this holiday. So Friday's session, S&P fell to a 2-week low. Dow hit a 3-week low. That's not bullishness. And as I mentioned, Goldman Sachs, Bank of America said they expect the Federal Reserve to hike rates 3 more times by 1/4 percentage point each time, lifting their estimates after data pointed to persistent inflation and tight labor market. What did I tell you? They're not backing off, folks. They're not. And they've been telling us that. They've actually been pretty transparent the last couple of months since Powell's I'm not going to lie to you till I get reappointed BS. Federal Reserve Michelle Bowman, she's been pretty straight up. She said Friday, U.S. central banks would need to keep raising rates to reduce stubborn inflation. She's been saying that all along. She said, I don't think we're seeing what we need to be seeing, especially with inflation. I agree with her. At the same time, Barkin said he supports 1/4 point hikes as it gives the central bank flexibility. I agree with him too. I think they're going to do 3 more 1/4 points. I don't think they're going to go to half, but I think they're just going to extend it, and that's not what the market was expecting. And I told you that was going to be the case. In the coming week, we have a lot of data. We got FOMC minutes, we got GDP, we got initial jobless claims, we got crude oil inventories, we got personal income, consumer sentiment. That'll be interesting. New home sales, I can't wait to see how new home sales go, new permits actually. But the big report is going to be GDP. On earnings, we got Walmart and Home Depot. They're reporting, and as I've mentioned, it looks like they're already out because the numbers, or they're going to be out soon because they're already reflecting some nastiness. Today, we're looking at existing home sales. Economists are looking at existing home sales to stand at about 4.1 million. Don't know if that, in fact, is going to happen. In Europe, investors are digesting very important data and more corporate news. The composite PMI increased to 52.3, about 2 points, indicating stronger than expansion in business activity. However, manufacturing decreased. They're still in a very unexpected and unforeseeable environment, just like we are here in the U.S. China closed higher as optimism over more government spending measures continue to boost sentiment, and we're not hearing all that much about COVID anymore, right? That's great. Finally, we're not hearing about COVID. I think the last 2 months is the last few times I heard about this damn COVID. At the same time, the Nikkei stock closed lower, weighted down by losses in precision instruments, electric machinery, chemical, petroleum, and plastic sectors. So no soup for us with all the chemicals, petroleum, and plastics. And we do have to watch Japan because it's the 3rd biggest market in the world. As far as movers this morning, the only real major mover here is CF Industries. They're dropped about $1. They were downgraded. I really like this stock. I don't know. We'll see how it bounces back, but not happy about that. And look at all the earnings that are coming out. Coinbase is coming out today too. Very interesting. But the big ones are going to be Walmart, Home Depot, and Medtronics, Public Storage, Palo Alto, Realty. These are the big ones right here. I kind of like how they organized it by market cap, or at least it looks like it's market cap. But yeah, I think it is, which is very smart because I don't want to read through all of these, right? But look at that. That'll be very, very interesting. KR Auction Services reporting, Pebble Body Hotel, Gel Windows. This is a Windows company. I know that because I did some Windows construction last couple of years buying these windows. But anyhow, we got earnings. The fun is not over yet, and we're going to have some more excitement. Now, communication is still holding on by the, and again, consumer staples is here, consumer discretionary is here, technology is here. Notice even the tech sectors are fragmented, even though they're moving higher. I don't think that's going to sustain itself. Technology already moved from 2nd spot to 3rd spot, and consumer discretionary, I think, will all come down. And I think consumer staples, financial, industrial, and healthcare will, in fact, rally. Over the next few days, be very, very cautious. The market is becoming very choppy. Earnings are still there. Travel lightly. Don't load the boat with positions. Let's get into it when the market drops so we can get some good market cap out of this to the upside, some alpha to the upside. Now, let's look at sectors individually. Communication sector looks like it's going to come right back down. Financial still looks pretty good right here. Technology looks like it's already breaking that low right there. Industrial's looking pretty good. Consumer staples is looking pretty good. Real estate looks like it's kind of coming down a little bit. Basic materials looks like it might have bottomed. It has that support area right here. Consumer discretionary still doesn't look all that bad, and we are having a lot of retail stocks, so we may still see some more upside in consumer discretionary as opposed to technology and communication. Healthcare looks like it's bottoming, but it looks like it looks like it could be moving up from here because it looks like it found support. Energy sector is not looking great right now, and utilities look like they can be coming up. Now, before I let you guys go, I believe I've cracked the code to a stock market. Yes, that's a bold statement. It involves one specific chart pattern and 146 little-known stocks. I've discovered a candlestick pattern with a historic win rate of 100% over the last 5 years on some of the most explosive stocks in the market. They're not speculative biotechs, penny stocks, crypto companies. They're stocks that like Amazon 15, 20 years ago, Netflix 20 years ago, Microsoft in the 90s. These are solid companies. They're not speculative stocks. And you won't find most of them in the S&P. I'm so excited about this discovery that I'm going to go live Thursday, February 23rd, to reveal exactly how I trade this pattern and these companies. You don't want to miss out. It's happening on Thursday. Follow the link. Check out this presentation. The program's been red hot. I think we're up 108% in the last 19 days or something like that. It's been doing really, really well in this crazy market. Follow the link below. Check it out on Thursday. There's more education there than you could ever imagine. And post some comments, feedback, like our video, subscribe to our Telegram channel. I do answer questions in the YouTube Wealth Press channel. Leave a question there. I'll respond to you. And have an amazing week ahead. Bye, everyone.